Hi there, thanks so much for joining me again. My name is Jonathan Mills Patrick. Welcome to another episode of Funding Simplified, where I simplify the business funding process, whether that's through debt and through lenders, or whether you're working with investors and giving up equity in your existing business or startup to get some funding along the way. Today, I want to talk to you about what a merchant cash advance is. Now, most businesses these days are accepting plastic to get paid for their product or service. Through credit or debit cards. At least most are. If you're not, I highly recommend that you figure out a way to get that handled. Companies like Square, Stripe, others offer ways for you to quickly and easily process payments through plastic. Now, some folks avoid that because there are fees associated with it, but I'd rather you have the ability to accept that, since it's a common form of payment these days, than not have it. So if you haven't set that up, be sure you check it out. If you don't have a way to accept plastic for your product or service, then you can't take advantage of what's called a merchant cash advance. So merchant cash advance is oftentimes an unsecured line of credit that's against either existing or future sales revenue that you have. And what that lender will do is they will take a look at your consistent deposits over time into your bank account. So let's say that you have $5,000 every month going into your bank account through sales using credit or debit cards. They'll take a look at that, kind of add it all up together, and they've got a formula that they will use, and they'll determine what size of a line of credit they're willing to give you, and then they're going to take a regular payment. Now, one of the ways that lenders that do merchant cash advance collect on those regular payments is that they do so through getting access to your bank account. So if that's something that makes you a little queasy, you may want to think twice about it. They don't always go that direction, but most of the merchant cash advance companies that I have experience with do get access to your bank account. They will then go out and draft on a regular basis, sometimes monthly, and in even some instances I've seen where they take out a daily portion of the payment that you owe them out of that revenue that's hitting your account. So that's what a merchant cash advance is. If something like this interests you, or you're looking for other ways to fund your business, be sure to check out my guide, The Complete Guide to Business Loans. The link is jonathanmillspatrick.com/lenders. Take a look at that. I talk about lots of different ways that you can fund your business, but a merchant cash advance is one that's available to you. It's an unsecured way, and it really works for companies that have existing revenue, oftentimes that are selling a product, have consistent what they call MRR. Talked about that in a past episode, monthly recurring revenue. Hope the information helps you. Thanks a lot. Have a great day.